Welcome to Quantum X Trades analysis of BTC and Ethereum. So without further ado, let's begin. On our previous video, we created targets which we were anticipating, which was 19,126 to around the 20,000 area. So we had this blue box, and we were waiting for price to reach in this box to determine what to expect. All right, so I want us today to picture two scenarios. So we have A, B, C, right? And on our previous video, we created this box by using the fib levels from the bottom, Okay, so from here to the top to the bottom. And this is how we created our box. And these were our targets from the equal lengths area, which is 1 to the 1.618. So what are we to expect since price has reached our targets? So the two scenarios that I want us to picture is a three-wave move, which is from here as A, our B, and our C. This marks a complete structure on its own. But we also know that we have another part of the Elliott wave, which is 1, 2, 3, 4, 5 waves, which is 1, 2, 3, a 4, and a 5. Okay, so these are the two scenarios that we have currently. So let's first discuss the 5-wave pattern. So if we are to expect 5 waves to the upside, that would mean that we are quite bullish. And if we're bullish on a higher time frame, this would mean that this whole move would turn into wave 1. We'll have a deeper correction of wave 2, and then an impulsive wave to create wave 3. All right. So this would be part of a larger structure. So if we switch the daily, right? If we switch the daily, it will look like that. So this whole move might turn into wave 1, wave 2, and then we have somewhere there wave 3, wave 4, and a 5. Yeah. So this is like a higher degree on a higher time frame. This turns into a larger 1, 2, 3, 4, 5 pattern. And what we're currently discussing might be on a smaller time frame or a structure in the lower degree of 1, 2, 3, 4, 5. Okay, so let's go back to the 4 hour. Let me reset. Okay, and let's remove those yellow lines so that we don't get distracted. Okay, so I'm going to draw them so that we can have them so I'll put 4 and 5 because we don't know where 4 and 5 would be if at all we get there. So wave 3 terminates at 1.618, which is where the price is right now. So we can expect a wave 4 and later a wave 5. So what I'm expecting is if we're going to get the 5 waves move to the upside, we should expect from where we are a retracement, and we can create targets. So we had these targets. Let's get rid of that. So they've served their purpose. I'll leave the box. All right. Let's measure the possible targets for a wave 4. So we measure that, and we're going to mark the following. So wave 4 usually retraces to 0.382 and 0.5. So if we are going to retrace, I'm expecting price to drop to this level or to this level and continue to the upside. How do we know that we're going to get wave 5? Honestly speaking, we don't know. We can only know if we come down, take out the top, and then from there we can the probability of getting that wave 5 is higher, right? So you only have levels that will be confirming that we're going to get that wave 5. So if we get to our targeted areas and we take out the top, that would mean that we're heading into the wave 5, right? The wave 5 is active, right? Has been activated. Okay. We might also get a scenario where so with the ABC, the 3 wave, so we have 2 scenarios, 1, 2, 3, 4, 5, expecting wave 4 down here and wave 5. If it's only the ABC, we might just get a pullback, which is we reach the target, yeah, these targets, get a pullback and just drop. So now this is confusing, right? This is all confusing, and I totally agree with you. But there's one thing that I also want you to take into consideration, which is invalidation level for wave 5. So if you're confused on what to expect, how to know if we're in wave 5, there's one point that will help you, right? So I'm on the bearish side. What I'm waiting for is price to drop, right? And I have an invalidation level, which is this level here. Let me remove that. So Elliott wave dictates that wave 1, which is this one, okay? So wave 3, wave 4, and let's say wave 5. Our wave 4 should never get in the territory of wave 1, which is the line marked red. Our wave 4 should never reach this area. If it does, it invalidates the 5th wave to the upside. Okay, so if we get to this area, now I'll be very, very comfortable placing my shorts, because I know that we are likely, if we come down here, take out our invalidation level, right, and then we go back up, I will be shorting the swing failure, or if we get rejected, I'll simply short that to expect further downside. Okay, so this invalidation level for me is very, very important. Let me quickly remove that. Okay, so I'll simply wait. If you are to trade this structure, you simply have to wait. If you're bullish, then you have to focus on what price does when it touches our target, right? Actually, I've accidentally deleted something. Okay, there we go. All right, so these are our 2 areas. So you wait for price to get to these areas if you're bullish, right? Or to this area, and you buy, anticipating a breakout, okay? Or if you're bearish, you can short from these levels, target these 2 levels, right? Exit and wait for another rejection. If we get rejected, you can again short, anticipating a further continuation to the downside. You cannot predict the markets. Even Elliott wave itself cannot 100% tell you, what price is going to do, what the market is going to do. The market is an independent, it's hard to predict, but we can just trade it with high probability. It helps us increase the probability of us being on the right side of the market. As simple as that. So let's discuss the bearish scenario. For me, once I see weakness around this area, let's say I see an impulsive move down, I see a pullback, I'm going to short it, targeting these areas, okay? Or if I need further confirmation, I'm going to just stay out, wait for price to come down here, right? If it takes out this level here, then I'll be comfortable. If it pulls back and gets rejected, I'll easily get into a short and trade this to the downside. For me, this is my trading plan. I'm not going to be messing around with BTC at these current levels, because I do not have any idea of what it is going to do. But there's a high probability that we're going to drop. Right now, we're kind of hovering around this area, but we are likely to drop from here. Whether we are looking at this as ABC or as 1, 2, 3, 4, 5, we still have to retrace. Okay? For the bullish scenario, I've already given you targets, which is this one or this one, and then we bounce to take out the top. For the bearish scenario, we come down, take out this. If we touch that area, that invalidates that move to the fifth wave to the upside, and then wait for the pullback and then short. Those are the two scenarios. Okay, so I was looking at the 15-minute time frame. We already have 1, 2, 3. Okay, 1, 2, 3 here. We have a connector, which can be X. This can be X, or X can be a structure like this. So this 1, 2, 3 can also be X, right? And from here, I would expect a drop, okay? And this move to the upside is likely because I'm expecting, let me just show you the DXY. So the DXY on a smaller time frame has created this structure. So this is an expanding flat. I'm expecting the DXY to drop some more. And if it drops, BTC on the other hand should be making this move to the upside, sorry. So this move to the upside, all right? And from there, when DXY hits the target, BTC will start dropping while DXY start going up because they're inversely correlated. All right, so this is what I'm expecting, which will make a structure like, let's say W, our X, and our Y, something like this. Yeah, so this is just like a short, very short time frame. This is 15 minutes. This is what I'm expecting in, I don't know, a couple of hours to happen. So this might be the X, or this whole structure from here to there might be X. I don't know yet, but I'm still expecting this move here to the upside. But this is also actually not important. What I need to see in the market is the price to drop. If it drops, I want to see if it takes out this invalidation level that we have of 18,350. If it doesn't, it finds support, I'll still be waiting. If it finds support, I'll still be waiting to see if it takes out the top. If it doesn't take out the top and it starts going down, then I'll be sure that we are not going to see that wave 5. Okay, so let's say it touches there, right? It goes up and then it comes down. I'm still going to wait until I see that this area has been touched. Once it's touched, I'm full-fledged bearish and I will be looking for a short. Well, that's basically my trading plan for BTC. Okay. Let me remove that. Okay, let's go back to the 4-hour time frame. So, to summarize, I wouldn't advise buying BTC at the current levels because it's risky. We are going to retrace, whether we like it or not. This is the area. This is an area where we're likely to retrace, and we will retrace to the areas that I've marked. It's very likely that we retrace. So buying here is not good. If you want to buy, if you're bullish, then these two marked yellow lines should be your target for the move to the upside. Since I'm bearish, I'm going to simply wait for price to come down, see if it breaks this invalidation level for the wave 5 to the upside, and wait for the pullback and short. Okay, that's my plan. Just to see what price does. If price comes once again, touches here or there and starts going up, I want to see if it breaks that top. If it doesn't break and starts coming down impulsively, then that will give me some signs of a continuation, which is bears taking over to push price down. I'm sure this time we might even break the lows. Okay, so trade accordingly. For the meantime, I've given you targets, what to expect for the bulls and for the bears. All right, choose your side, and from the video you can choose where to lean to in terms of trading. If we look at Ethereum is the same thing that is happening with BTC. So we also have this upper bound is the 1.618, which is a typical termination point for wave 3. We can get wave 4, right? So I'm also expecting, so I've marked the invalidation level for wave 5, which is at 1,351. If price comes down and so much as touches this level here, then we should forget about that wave 5. That means we're going to just simply pull back and then continue going to the downside, which is a scenario I would like to see. Okay, but well, I'll be open-minded. I won't be biased to any side, but I'll let price action guide me. All right, so we have A, B, C. This in itself is a complete structure because C has terminated at 1.618. From here, we're expecting price to retrace, to move down. And we can also create targets for, let's see, the retracement for the 5 waves moves to the upside. Let me mark them quickly, which is here and 0.5. Okay. So if we are going to get that 5th wave to the upside, this would be the buying area, or this would be the buying area. If this wave 4 drops all the way to this level or touches this, the red line, which is 1351, then we should forget about this move. We should simply expect a pullback and a move to the downside. I'm leaning more to the downside because I don't think we have bottomed yet, especially if we, let's say, tune to the daily, right? We have had this structure here, right? And we had 3 waves here, and we had a connector. I'll mark it pink. All right, I would be expecting 3 waves, to complete the structure like that to the downside, and only from here would I expect a move to the upside. I'm expecting a structure like this, but I don't want to. Well, I can draw whatever I want. I can make whatever lines I want to make on my chart, but it doesn't mean the market would do that, right? I need to follow some guidelines like Elliott wave and price action. So that's why I'm not buying Ethereum at current levels. I'm simply waiting for some confirmation to be sure of the trend. So from here, I'm expecting price to retrace. If it touches the yellow lines and starts going back up, I'll see if it takes out the top. That will indicate bullishness in the market. If we reach this red line, that indicates bearishness in the market. But that is for our next video. We'll see what price is doing in the next few days, and I'll keep on updating. For those that are bullish, the yellow lines are your buy areas. For those that are bearish, if you're planning to short at current levels, then at least your first target are the yellow lines to exit, because we're expecting the market to bounce from there, or the price, sorry, to bounce from there and continue to the upside. So in my case, I'm bearish. I'm expecting price to continue going down, but that's short term. I'm yet to see what price does when it touches these 2 lines here. And when it does, I'm going to make another video and share my thoughts. So once again, thank you very much for watching. Please subscribe, and I'll see you in the next video.